tired of all the uneducated noise you're getting from the droves of YOLO meme coin peddling douchebag gurus out there trying to use you as their exit liquidity? Would you rather learn a competent university-level set of skills that will guide you in managing and investing for the rest of your life? Join us 3 days a week at Digital Investor. Develop your knowledge of game theory, cognitive bias, macroeconomics, monetary theory, investment theory, psychology of the crowds, and more. For more info on Digital Investor and how it can help you, reach out at nickblacknext.com.
All right, let's see. Got all these boxes. Which one is the new one? That one? Yeah, I think that's the one we're using. Yay! When you walk with Buttercup and I saw a Bobcat. Oh, that's cool. I saw Buttercup and Bobcat. I wasn't sure whose name was what. If you were walking out with a cat named Bobcat and a Buttercup walked by. Howard, still alive, still kicking, still buying Newnet and Algorand. Howard. Okay. So what's going on? IBIT launched. They officially launched their options on iShares. I think I can pull that up. Let me see. Creamy goodness. Let me give this a go. Let's see. If we go to eTrade. Actually, you know what? IBIT options chains. Let's see what we got. There's IBIT. There's the option chain, perhaps. Oh, yeah. So let's see if there's anything super exciting going on. All right. So many of you will notice when you're looking at this. Let me make it big. Let me make it bigger. Boop. Let me make it even bigger than bigger with a couple of plus signs real quick. Okay. Oh, I guess that's as good as we're going to get it. It doesn't like to center it on this. Oh, no. Okay. All right. Well, here's what we got. We got calls and puts, options types. Okay. Here first are the expiration dates. They only have the monthlies, so we don't know. We only have the December finish right here. Pretty much the way you determine what the price is of Bitcoin is by going, okay, well, how they correlate. I know that there is, as far as the price tracking, there's a 78%, I think, correlation in the price movements. Remember, these are options off the stock asset. So the equity asset, which is the IBIT shares. So it's not one-to-one pegged to Bitcoin. There's a little wobbliness in there, which is why it's not 100% direct correlation, because it's still people trading shares. The other thing is, you'll notice the price 53, 52, Is that in the money? Is that out of the money? Was it? Well, right now, 52 would be in the money. 53 would be out of the money on the call side. In the put side, 52 to 51 would be out of the money. It would be in the money to get put, out of the money. These are all in the money on the put side. Makes sense? All the gray ones, right? Because you would get put because it's already at that price. Does that make sense? So essentially, like if you were 52 and below, okay, and you sold this, you would get put into Bitcoin. If you were 53 and above, and you'll notice the price keeps going up. Why? Well, because these are all in the money already, because anything above the current price, you would absolutely get put in. Does that make sense? So from here, from 52, 51, 50, 49, if you sold these puts and the price reaches those points, so it's just the opposite of the call side. On the call side, and this stuff, if you just kind of look at it, it'll start to make sense. Here's where the price of Bitcoin already is. It's around, and the relationship is like 1,750 to 1. So you kind of like, to get an idea, you kind of multiply this by about 1,750 and it gets you close to the price of Bitcoin right now. Well, anyway, on the call side, if you're selling these are out of the money. And typically out of the money are the ones that are not colored in. You'll notice the gray colors. These are all right now in the money. These are all right now in the money for calls. These are out of the money for calls. These are out of the money for puts currently. That makes sense. And that's the line right there. So the way to do this, I mean, I'm not going to get into the tactics of it, but if I was looking at this, I would be looking to park cash over there. And if I had cash, I would be selling out of the money puts, meaning it's not there yet, right? So I would be selling out of the money puts against this. And then I would try to figure out, okay, what is where the strikes? Okay, what is 48? Well, you just multiply 48 times roughly 1750, somewhere between 1750 and 1757. That gets you the approximate price of Bitcoin, and you're speculating. But it's speculating on speculating, because if the price were to go down, people in this fund might panic, and the price of that might go down. So they're correlated. It's a strong correlation. It's not a perfect correlation. All right, there. I'm sure we'll be doing a lot more of that behind the scenes with the private clients. And also the digital investors. We probably won't do much public-facing stuff having to do with options, just because that's the other animal, and that's not our purview. So there is that. Creamy goodness. All right. Let's see. What do we got? We're going to talk game theory today versus cognitive bias. We'll go look at markets. We'll see if anything kind of popped up in the news. I think it's just a countdown for Gary buzzing off. So he'll go soon enough. Gensler will be gone. His little brunch bullshitty thing last week seemed like not a farewell speech, but it seemed pretty close to a farewell speech. So there you go. All right. What else? All right. If there's any questions you guys have, you just want to just knock out some questions, a little Q&A. Don't ask specific things. I'm not going to tell you where to buy, sell, trade, anything. That's not what this is. Theoretical questions. Ask theoretical questions. Theory, man. Theory. Oh, no, not Siri. Theory. I guess I could screw everyone, right? I could just be like, hey, Siri. And then anybody that's got there, because it worked on my phone. My phone was just like, bloop. Anyway. So let's go over and look at markets and just see what's going on. Let me get back to the brand page where we got all our little bumpery things. Okay, let's go check it out before we get into our game theory and cognitive bias. All right, where we be? 92.4. All right. So there was an interesting article that I read earlier about where a lot of people are going to be melted, where there's a lot of leverage. I think there's a lot of leverage at 90,000. You know what? Let me not misquote. There was a lot of leverage on both sides. There was 1.6 billion in short leverage over, I think it's like 92.5 or 92.6. This is right on the cusp. There's a lot of people that are about to get completely flummoxed. It'll be interesting to see what hits. Let me find the article. Potential Bitcoin price targets. Nope. Decline in hash rate. Nope, we don't care. Let's see. Stablecoin issuer. Nope, we don't care. They are. It looks like Department of Justice is going to go after Tether again for the wide scale counterfeiting operation that is Tether. We'll see we'll see how long that is, like how long it takes, or if they just do sketchy ass side deals with those guys, like they've probably already done. Let's see. Brian Armstrong to meet Trump. Let's see. Mara Holdings, we talked about this yesterday. The miner increased its previously announced convertible note offering from 700 million to 850 million. They started at 500 million. This was a week ago. So now they're at 850 million. They're following the Michael Saylor strategy of kind of pervert the truth, borrow and buy and borrow and buy and borrow and buy. This is a miner. You're like, what is a miner doing just buying Bitcoin? Shouldn't they be expanding their facilities to just mine more Bitcoin? No, we're just going to buy. We're going to buy. How soon before Mara is no longer profitable as a miner, and all they do is buy Bitcoin like MicroStrategies? You just get a bunch of companies, a bunch of asshole companies that buy Bitcoin. That's their whole business. What do? I buy Bitcoin. Wow, you're a genius. You and all you guys are amazing. Let's see. Where is the leverage? There was a whole article on leverage. Bitwise is going to run their options chain starting tomorrow. So that'll be Wednesday. Let's see. Alleged corrupt LA police sheriffs. Oh, there's a surprise. Where is that article? Oh, yeah. Bitcoin liquidation alert. Here it is. Bitcoin faces intense volatility risk as it approaches critical levels of 90,000 and 93,000. Leverage clusters in Bitcoin liquidation zones could trigger rapid price fluctuations. Rising cumulative leverage highlights vulnerability for both bullish and bearish traders. If Bitcoin drops below 90,000, mainstream centralized exchanges could see long liquidations worth about 540 million. Listen to this. If it beats 93,000, so keep your eyes out this morning. If it beats 93,000, short positions will be liquidated for 1.6 billion. What the fuck is wrong with people? I don't understand why you would short Bitcoin after what happened at the polls and what's been happening in the markets. Like, really? Like, seriously? So stupid. I mean, these people deserve to lose everything. Just everything they've ever had. Even their name. Strip their name from them, these dumb assholes. 1.6 billion. What a bunch of jackasses. Good. I hope they lose all their shit. Anyway, so the exact numbers I think are because there's a key number here. It's not right at 90,000. It's if prices get, I mean, they're already above, but if prices get much more than 91,834 and we're at 92,400 right now, there could be some sudden liquidations as people go to cover. The clusters of leverage right now, there's 10x, 25x, 50x, and 100x. Well, you know, these are all these dumb assholes on mostly, I would say, Binance and stuff like that. Stupid. I hope that all these dudes lose everything. I hope they all lose everything. Everybody leveraging both sides. I hope they all get knocked. All of them. People don't have a long memory. They forgetful. They quite forgetful. Yeah, 93 is the big, 93 is, I think, is the big number. Andy, I think that's where, it's just toasty. Yeah. Okay, so that's all that I had there. I just want to see that liquidation article. All right, let me see. There was a question. Okay, in theory, would a hypercycle node factory have an easy control mechanism for multiple node factories after first split? I don't know how management works after splits. I mean, you could, I still look at it as you have a store and that store divides. Now we will build things that help you manage en masse. But when one coffee shop becomes two coffee shops, that's two coffee shops. That's different employers. Different employees. That's different, demands on your stock and things like that. So I think you'll be able to manage them in the aggregate, but they are different units. They may be servicing different requests and things like that. So I would say, I don't know. That's probably a good Brandon question. Yeah. All right. So let's take a look and see what's going on. Yep, coffee shops, man. Coffee shops. Okay, so the Bitcoin 92,457. And we know that punishment happens in $542.37. Oop. All right. Ethereum 3,100. It touched for a second, like 3,200 last week. It touched 3,400, but it's still been languishing. And yet we have all of the data that says that's weird. That doesn't make sense. So my guess is it's just people are not being directed to the Ethereum ETFs right now. That would be my guess. They want all the hemorrhaging to stop at Grayscale, which has been just the perennial loser, just the biggest loser among losers. All right. So anyway, there's that. XRP, of course, it's coming back down. It's gone up for no reason. It was a guy I'm working with on a deal, and he had asked me yesterday, he said, hey, what about XRP? And I was like, well, you're a financial institution. You already don't really trust crypto. Do you trust Brad Garlinghouse and Chris Grand Larceny, who, by the way, are still in federal court, having been found guilty of violating securities laws and awaiting a fine and an appeal of that fine, which may not go in their direction? Just because it's appeal doesn't mean if a judge grants an appeal, it's an appeal on technical grounds. This doesn't mean they win. They're like, we got our appeal. Of course you get your appeal. You file notice of appeal. And if there's a technical mistake, they will hear that. It will go to the district court. The district will assign it to the appellate, whatever. I think it's what circuit is that? Ninth Circuit, maybe, whatever. And then that appellate panel is going to probably kick the decision back. They're going to kick it and they're going to remand it back to whatever was the original judge, Torres, with maybe some guidance, maybe not. And she will look at the merits of the appeal and see if there's anything there. Otherwise, they will assign a fine, and then they're going to have to pay a fine. And it's going to be minimum $125 million. Maximum, I think, $2.1 billion. I don't think it's going to be either of those two. It's probably going to be 2.5 or 2.25, 100 million, 225 million, 250 million, 500 million, something like that. So I think that's the ballpark. Yeah. So we'll see. But I asked him, would you do business with them? And he's like, I don't know. Like, yeah. And also their technology is not interesting anymore. It was interesting in 2017. It's not interesting now. No one gives a shit about XRP and the XRP ledger. No one's using it. I say no one. No one outside of like 4 people. They all say, on-demand liquidity. Look at it. What do you look at? What? There's nothing. You can go look it up right now. On-demand liquidity. There's nothing. They're doing nothing with it. At least the jack wagons at Tron have some fishing and weather game. It's like a fishing game and like a weather app hooked up so that it looks like there's a lot of transactions going back and forth. It's funny. It's fake, but whatever. At least something. Like at Ripple, they don't even have that. They don't even have like a weather app. Right? Like, just do something, man. Track the movement of bamboo shoots in Southeast Asia and put that on the blockchain to show some. They do nothing. So I don't know, man. I think it's a dummy trade. I think a lot of these assets, the ADA trade is a dummy trade. This is the dummiest of the dummy trades. There's nothing going on at Cardano that's interesting. Not any more than it used to be for the last 3 years. Someone I know thinks XRP will reach 50 to 100. I mean, just do the math on that. So look at the market cap. 62. So anybody want to do some quick math? Here, please, you guys, let's jump in. Everybody jump in. Let's just in your brain imagine that XRP is about a buck. And the market cap's about, 60 or so billion. And let's multiply that by 50. By 50. So we're at 3 trillion. So XRP is going to have a bigger market cap than the entire crypto space. All of crypto, XRP would be the winner. I mean, I don't know. I don't know if those people understand that in order for the market cap of these bigger assets to go up, you have to push a bunch of currency units into that. Where's all that money going to come from? There's only so many dumb hayseed rednecks riding around on John Deere tractors waiting for the great reset to push money into this asset. Who's going to do it? Brad and Chris are too busy selling as fast as they can. So ain't no buy pressure there. It doesn't make any sense. XRP isn't affected by market cap. Well, what? What? I think that's probably this is one thing that the meme coin traders, they get it. This is at least one area where the meme coin jackwagons, they just look at market cap. As a matter of fact, they don't care about anything else. Nothing. Just, market cap. At least they get it and they don't know anything. I mean, nothing from nothing. My buddy who trades meme coins, he can't change a fucking car tire. I promise you, he can't. I've seen him not change a car tire. He's like, I'm like, dude, you got the whole, no. AAA. I'm like, what are you talking about, AAA? Anyway, but he trades meme coins. Oh, look at that market cap. We get 3 zeros. We can knock that off and do this. I'm like, what? Weird. I mean, that's a weird, your 5 T's are just 1 M market cap. That's it. And does the name rhyme? Spam Bam. Oh yeah, I want it. Let's do it. Spam Bam. Market cap, $4. If it goes to $1 billion, we're rich. Who are you going to sell to, buddy? Oh, never mind. He's been rich like 4 times. He'll call me. Dude, I did it. 150 grand. I'm like, sell it. And then he'll hit me up later. Oh, I got 12 grand. Where was the 150? Yeah. No, it was too illiquid. Well, you're not too illiquid. It's only illiquid. So market cap alone is not enough. You have to have safe liquid markets. You have to have a way to exit. You're like, oh, God. Anyway, game theory and cognitive bias. Am I right? Okay. So let's keep going. XRP to 50. I mean, cool, I guess. There's dumber ideas like Cardano to $10. I'd say that's a dumber idea. I'd say it's one of the dumb ideas of the century. Nothing has changed in Cardano except that Charles is basically gone. He's written himself out. That's funny because he used to shit all over Dan Larimer, who was the guy that created a couple projects, the last one being EOS, and he booked it quick. He made his money and booked it. Good for him. He's kind of a piece of shit. I've heard him talk a few times. Look him up if you want to read about a guy who's really, really smart and a total piece of shit. Dan Larimer. Anyway, he very punchable face like Gary Gensler. Like you want to just punch him in the squishy bits of his face. But Charles would make fun of Larimer. Oh, yeah, he just left the project. Well, what do you think you're doing, Charles? And he's kind of like on the sly lying. He's kind of lying by omission. Gonna go join the cause in Washington. Wait, so you're gonna work for the president? Just gonna go advocate for crypto the way what are you saying? Because it sounds like you're saying you're gonna work for Trump. Well, no, I didn't say we're gonna set up an office. And so you're just gonna go be an advocacy? Get the fuck out of here. What? So that was all bullshit. All bullshit. The play on Cardano is maybe if midnight, that's what I was going to get to, Pam. Good. Maybe if midnight launches, maybe. It does seem like those guys seem pretty I don't know. That's tricky competency, right? They seem fairly confident, and they're British. So, they already sound smart. So they sound quite smart and posh when they say the same things that I say, but they have a British accent. You tend to believe that they are correct. But anyway, outside of their accent, let's see how this airdrop goes. I knew we were going to get screwed on it. We're going to get screwed on it. For those of you that think that Cardano holders are going to get some special treatment, nope. It's going to be a mass airdrop to all sorts of platforms, holders of all sorts of tokens. On the other side of it, you might end up getting midnight airdrops in like 10 different wallets, right? Like just the spammiest shit you can imagine. So ain't nothing going on at Cardano. Nothing. Now the stuff that they've done is great. It's cool. Good work on governance and all this. Good work on voting and all that. No one cares. That's it. No one cares. This is a dummy trade. Well, what I mean by that is it's a quality asset with a less than quality team at this point. Because you know what the team is? The team is community. What other places have I seen community not really work out? Oh, like, most everywhere in the Middle East where warlords and shit run stuff. How's that working? How does not representative democracy, but like pure democracy? You guys know the adage. It's two wolves and a lamb voting on what's for dinner. And so people start talking about token burns and all this kind of bullshit. So Cardano to me it's not to me quality anymore. The work they've done is quality, but the future is not interesting to me. Now, could he snake his way in by, handing money around and doing all sorts of stuff? Who knows? I don't think Charles is the kind of guy that gives people envelopes full of cash, which is also why I think Charles is not the guy that's going to get anything done. He's kind of smug. He's kind of self-important, prideful. He's unlikable. I can respect him, but he's very unlikable. Like, I see why people hate him. I used to wonder, like, why does everybody hate Charles? He's trying to do all these good things. Yeah, he's very unlikable. He whines a lot. He cries like a little bitch on his little YouTube stuff. And then when he put out the poll, he didn't get the response he thought. Oh, you guys think I'm a cancer to Cardano? Well, I'll show you. Let's do a poll. And the poll was resoundingly, yes, Charles, you are a cancer to Cardano. And then a week later, oh, I'm going to Washington. I'm going to go advocate in Washington. Get the fuck out of Cardano then, dude, you slob. Like, you whiny slob. Come back when you're an adult. Anyway, all right, that's my Charles thing. And plus, he ducked me 3 times, then lied about it for an interview. We were going to do a whole thing. He personally, like, I go back and forth with him. I used to, not anymore, but I used to go back and forth with him on Telegram. Like, I can show you like a long message history. He's like, okay, get with Ron. We'll set up the interview. It'll be awesome. And then once the sad bastard YouTube videos started coming where he was crying and whining, and they put me off 2 or 3 times, I was like, no, I don't really want to talk to Charles. There's not anything interesting about Charles that I kind of want to listen to. And then I realized, wait a minute, I'm holding far too much of that asset. I think I'll change that. Anyway, moving down the list, Sui and Aptos based on the Move blockchain. Why is that interesting? Well, the DNA is, remember Meta, before when it was Facebook and they tried to come out with a DM stablecoin. So what evolved from that is Sui and Aptos and some other peripheral kind of less interesting projects. Are these interesting? Price-wise, they're interesting. I mean, you can't hate dim gains. I know that doesn't mean anything. Specifically, that doesn't mean a project is good. But if you treat this as what it is, a spammy project, likely pushed by the same VCs that pushed Solana. So let's have a little vote. Let's do some democracy, everyone. There's 150 people here. Get ready. Get your fingers on the voting buttons. If you could jump into Solana at whatever it is, 2.25, 250, 260, whatever, hoping that Solana somehow goes to 500 off of meme coins and bullshit, or you could put your money in SUI at $3.70, thinking that it might go to $30. What do you think is more likely? Solana to get a 2x or SUI to get a 10x? What would you do? So for me, it's worth looking at. It's the same scummy, spammy venture capital firms. And remember, these guys don't know shit about shit, but they are brilliant marketers. They market like a mofo, and they market other hedge funds, and they market other money managers. Call the hogs. There you go. Call the hogs. See? There you go, Howard. Immortal. So that's just, and so we always try to imagine what would other people do. Well, if you're a new person to crypto and you see Solana, let's say you got $200 to put into crypto. You go, okay, I opened my Coinbase account. Let's see, what can I get? Oh, I can get 4/5 of a Solana because I like my meme coins, my dog coins, and my animal coins. Or I can get like, holy crap, I can get like hundreds. I can get like over 100 SUI coins. And when that goes to 200, because that's the logic, because people don't understand market caps and they don't understand that it takes currency units to push a market cap. Unless it's a totally constrained supply. And then if you look at the circulating supply, it's like 4 tokens. And then you know it's a scam because the liquidity is garbage. So like not any one point of information about these assets in a vacuum makes any sense. Okay, WorldCoin. I don't have any thoughts on WorldCoin. I don't know, man. It seems sketchy. But on the other side of it, like, now, are you talking about the WorldCoin, the Sam Altman thing? Right? Not World Mobile, but WorldCoin, right? The orbs. Listen, I know it's unwise to bet against Sam Altman. I know that. I don't see why this coin that's going to be meant to give away to people is something you would invest in. That's not been made clear to me. I'm just not clear on that. Yeah. Right. Like, is that clear to anyone that we're creating this coin that we're going to give to everyone? Okay. Why would I invest in that? This is something that would bother me. I would just be going, like, why am I buying it? The plan is to give it away as some kind of universal basic income? Yes. So people are going to get it and immediately spend it? Yes. Oh, okay. But why do I want it as an investment? I mean, I don't know, man. I don't know. These are the things to think about, man. Okay. Fetch. Okay, so let's have another poll. Who here, and this is a public facing show. I'm sure there's people from, by the way, if you're here from Cryptopia, say hello. If you're here from any other communities, I mean, this is all one community. We don't have like, you may come from another community, but we are still a community. Crypto, people who want to get paid in crypto, people want to make money, people want to make their life better. I don't fucking give a shit where it comes from. I don't care. Like, what did they say? You know, a good engineer doesn't care where the next best idea comes from, only that they seize it. We gotta all be good investment engineers. Who cares where a good idea comes from if it's not yours? Do you want to be prideful or profitable? Howard. Tisk. No. Well, anyway, so here's my polling question. Oh, 3 people just left. Maybe that was them. All right, here's the polling question. Do you trust the team at Fetch? That's it. If you do, that's fine. Do you trust the team at Fetch? I know that's always kind of suspicious. And I say Fetch, I'm talking about ASI. And you know what that implies and who that implies. If you trust them, that's fine. And you don't have to answer if you really do believe them, you say, listen, I think Ben and those guys are going to turn it around despite all of the other stuff, despite that Powell AI thing just completely disintegrating a few days ago. And by the way, the Powell people, the community voted vehemently, no, we will not participate. We do not want to participate. We don't want to be a part of ASI. We don't want to be a part at all of Fetch. They were very clear. And then Fetch community came out and was like, not Fetch, but like ASI was like, we've decided not to have them participate, or what. They kind of rewrote it like it was their decision. You can't, it doesn't work that way. Let me explain voting real quick. If you put something out to a vote and you don't get the answer you want, you don't get to then say, we decided. You didn't decided shit. You put it to a vote and your vote got squeezed. Your vote was no. It's not like when Charles Hoskin put his vote out there. Do you think I am a cancer to the community? And everybody said, yeah. He can't come back and say, I've decided I'm a cancer. Bitch, you decided nothing. You let the public vote. They voted. The vote is the answer, not your decision. You didn't make a decision. I've decided that I'm fired today. No, your boss decided that. He decided you're fired, or she or they, and your ass is fired. You didn't decide it. You can't fire me. I quit. Well, that's weird because your resignation is 3 days older than the letter where I said you're fired. I don't even know why you're here right now. Maybe that's to give us your parking pass, which is already, by the way, expired. Get the fuck out. And here's $4 for parking. So it's just like, come on, man. But yeah. So yeah, that's the another thing that's very sketchy. If you're going to put a vote out there, do you guys know what we have talked about this a lot. You guys know what astroturfing is, right? Let's say I have a vote and all of us here vote. There's 161 people. So there should be 162 plus me, the 163. So there's 163 of us, right? So some super majority of 81 plus votes should make a decision, right? Only there's actually 320 votes. I have 160 myself. You would say, wait, but you can't use those votes. You're the one putting the vote to the public. You can't then come and vote in your public vote. Oh, no, it won't be me. It'll be my brother and my cousin and my uncle using their tokens that I gave them, that I transferred into their wallets. They'll be voting. Well, how many tokens did you give them? Well, there's 163 of us. So I gave them 700 votes. Oh, that seems sketchy. Nope. That's called astroturfing. And this is not just in crypto. This happens like all over the place. Astroturfing it's a term that's meant like this happens so frequently that there's a term for it, which is kind of a cool term because I just put turf in my backyard and I love it. And the cats love it. Weird segue. Anyway, so that's not democracy when you hold 3/4 of all the tokens and then you put it to a vote. Let's see what you say. And then they come back and say, the people have spoken. No, bitch, the people haven't spoken. When the people spoke, it was 49% in favor of passing. You had to have 65%. It was not going to pass. And then one day later, you guys put your private tokens in there. You guys had a private vote with 16 people that all own huge positions in AGIX privately, and that's the vote. My friend, that is not just astroturfing. That's a fucking scam. And people are starting to get wise to it. Then let's move past all the scammy vote. Oh, by the way, he just dropped this in an AMA. Oh, by the way, we're going to claw back like 100 million in AGIX from the future. It's supposed to be locked up in a smart contract, but it turns out it's not because there's no smart contract locking any of this shit. It's all done on a piece of paper and some bubble gum with Mario. But that's fine. That's cool. That's good accounting, right? So the locked up tokens got unlocked and we went ahead and sold them. Oh, by the way, we told you we were going to tell you before we sold them. Yeah, we went ahead and sold them. My bad. And you wonder why the price went down from $3.47 to 70 cents at one point? Who knows? Probably the market. Oh, and the fact that we sold 100 million fucking tokens on your neck, supporters. So they're, oh gosh, that does suck. Yeah. Okay, so then we're going to absorb these other companies. But because we don't want their founders to exit too quickly, we're going to put all these stipulations in place. Like we're going to charge a 4% gateway fee. Like if you want to transition your tokens out from your crappy tokens into our new product, like, okay, think about, let me even make it simpler. I make a deal with you to absorb your tokens into my token supply, debasing everyone, by the way, because we're increasing the token supplies or whatever, but never mind all that. We're debasing your currency. So everybody that holds the token is going to hold tokens that are worth less because we're absorbing all these other tokens. Never mind all that. Let's talk about the new guys. So we're going to merge. We're a team, not the companies, mind you, just the token. Is that legal? Who knows? It's a weird kind of fiction. No one really even cares what it is, apparently, because no one even really knows what it is, apparently. So we're gonna absorb the tokens, and then once we've absorbed the tokens, we're gonna charge you a fee to get your tokens. You're like, wait a minute, but I thought we were buddy. We're a team. We're gonna beneficial AGI. Yeah, listen, we are, but it's gonna cost you. It's gonna cost you 4% to. Oh, and by the way, we pulled liquidity from the other. You can't get out of your token now. That's over with. So you can't get out. And the only way you can transition your crap token for our crap token is by paying Mario a 4% fee. Oh, that seems weird. It almost doesn't seem like a deal. I feel like we should have known this stuff before we voted on this piece of shit proposition. Yeah. It wouldn't have mattered anyway, because the founders are already supporting all this, because they're the ones that want to exit. And because their shitty token doesn't have any liquidity, they can't get out. But now that we've melted it into Fetch ASI Chimera token, they can exit on your neck, dummies. That's like, I know that's in parentheses. That's not what's actually printed, but fucking wake up, man. There's so many shady motherfuckers right in front of you, right? Suspect everyone and don't, look, there's things I can like and not like stuff about people. You know what? I trash talk Mario a lot. There's things I like about Mario. Like Mario as a person is a cool dude. I like Mario. He's been over to my house. He's chill with me, but he's a shady fucking business guy, but he's a nice dude. So you got to wonder like where the wires got crossed. Ben Gortzel is a freaking genius, man. He got out of high school at like 4 years old or something, right? He's probably forgotten more than I will ever know about very esoteric things, right? But when you fall in with crooks or when you fall into crooked behavior, you are vicariously crooked. So it is what it is. So at a certain point, you got to say, the saying, don't keep rattlesnakes in your backyard and expect that they're only going to bite the neighbor's kids. Like, wake up. People, man, God. See, what I should have done is I should have never said any of this. I should have my business path was different. I probably should have gone into management, just full-time management, kept my damn mouth shut, pull the same bullshitty shenanigans all these other motherfuckers do. I was talking to Kendall and I were talking about this the other night. Like, how do you get rich running a hedge fund? Because people are like, oh, I'm part of a hedge fund. I'm rich. Like, don't respect someone just because they run a fund. That doesn't make them rich. Let me tell you how it works. You guys want to do some fun math? Let's do some fun math. Okay. I get a job at Goldman Sachs because I went to the right school and I met the right people and I shook the right hands and kissed the right ass and, gave the right back rubs, whatever. Go as far with that analogy as you want. Then, I decided, let me put on some different music. This is good, but it's like a little too intense. Then after 3 years at Goldman Sachs, I built up a pretty good Rolodex, but you know what? I wasn't really good at my job. Turns out not everyone's good at like investing and math. So I got my ass punted. They said left. They didn't say exactly why. There was some cause. Could have been my drinking. Could have been my drug use. Hard to say. Hard to say why I got punted from the scumbaggery at Goldman Sachs. But I did. So I left Goldman Sachs. I gave it a while. I was quiet. And then I decided to throw my own shingle out there and spin up a fund. So I start calling up the Rolodex, which is illegal, by the way. I'm not supposed to communicate personally with any of the people that I communicated with while I was at Goldman Sachs, but fuck it. I'm gone. What are they going to do? Sue me? No, because they're as dirty. And I know where bodies are, because if you worked at Goldman Sachs more than 4 minutes, you know where bodies are buried. So off I go. I spin up my own fund. Now, I probably was part of some little trading desk. I bring on, not a lot of money. Remember, in rich guy terms, not a lot of money is somewhere between 100 million and 500 million. That ain't shit, man. Like, really is nothing. Okay. So let's say I do a little better than average and I just bring on $1 billion, right? $1 billion. And I know, because I've been watching these markets, it's pretty clear things are going straight up. So I'm just going to track with the S&P. We're not even talking about crypto. I'm just going to track with the S&P. And I'm going to get a 21% year on that $1 billion. So first of all, real quick, everyone, do 2% of $1 billion. That's my management fee. That's fair. 2%, 2 and 20, 2 and 20 with a watermark, with a high water line. So my 2%, that puts 20 million bucks in my pocket. Am I right? Maybe my math is wrong. I'm not a hedge fund manager, so I can't be held responsible for my math. So let's say I put that first 20 million immediately in my pocket. That's the management fee. I get that. That's done, right? So I got 20 million bucks. Have I accomplished anything? No. I just hit up some people that were in my Rolodex from right before I got fired from my job. So I got 20 million bucks in the bank. I have a 21% year. So you have 21% year. Don't you worry. Yeah. So I have my 21% year on my $1 billion. That's $221 million. Okay. I get 20% of that. Anybody want to do 20% on 21 million? Let's just call it 20 million. Let's just keep it simple. I mean, on 200 million. Anyone? So I think I put another 40, million in my back pocket. So now I'm worth somewhere between 60 and 65 million dollars because the S&P went up, because I just indexed in. I did nothing spectacular. I just didn't lose all their money. Right. So now I'm at 60 million. So I'm at 60 million. Ooh, which one? Let's do strength. Sorry. I gotta do strength. Do my legs. Do my second leg workout. I squatted earlier. So I'm at 60 million. I've done nothing. I catch one good, okay year. Oh, but by the way, after my strong performance, I go out to people start talking. Oh my God, Bob, or no, Nick's fund. Nick's crushing it. They did 21%. Holy shit. He's crushing it. Yeah. It's just like, well, the S&P did 21. Yeah, but Nick is good. Okay, cool. So I take on $5 billion now, because all the people that were on the sidelines are like, no, he's for real. So I take on $5 billion. You know what my 2% fee on that $5 billion is? Remember, I've already sacked 60 million bucks. I've done nothing but index with the S&P. But now I'm up 60 million bucks in my back pocket minus taxes and whatever. And I have to pay like 2 people in my office, because I run this shit out of like a little basement office. And I have one nice office that I share with like 7 other companies, but nobody knows any, because no one's actually coming into the office, because people don't do that. So I put 60 and change million in my pocket. I take on $5 billion more dollars. So I take on $5 billion in investment. What's my 2% on that $5 billion? That's 100 million. So I put 100 million in my pocket. I've done nothing. I've had 1 year that I tracked the S&P and done nothing but get fired and take my fucking Rolodex with me. And I've got 160 plus million dollars in my pocket. You see where this goes? So obviously you would say, well, at some point you're going to blow up. It's not going to work out. You're going to have a bad year. Yeah. But until then, I get my 2% management fee. And even if let's say you cut the gains in half, I only made 10% this year on the S&P. Remember, that fucker only goes straight up because it's not indicative of the real economy. So I made 10% this year on my now 5 billion. So on the 5 billion, we brought in 500 million in profit. I'm doing 20 points on that 500 million. Anyone? Oh, is that another 100 million I get to put in my pocket? So I'm at $261 million year 2. I have fucking done nothing. And I've got 260 million bucks. Now, anybody here, you meet someone out on the street and I'm a hedge fund guy. He's worth $260 million. You think that is a successful motherfucker, don't you? You're like, Jesus, I better listen to this guy. This guy knows his shit. It's no bullshit. Now, for the next 6 years, he destroys his fund. He still gets his management fee. He's still 2%, but people start redeeming and they unwind. The whole thing gets unwound, or his partners, but whatever. Boom. It blows up. It's gone. He walks. He still got his management fee until that thing unwound. Even if it was 5 more years and it went 5 billion, 4 billion, 3 billion, 2 billion, 1 billion, he still made 100 million, 80 million, 60 million, 40 million, 20 million as it unwound. Think about that. Think about that. This guy's now worth, well, let's see. We were at 250. Add 80, add 60, add 40. There's 100, 360, 440, 440, 460. This guy's worth, he's almost a billionaire. This guy's worth over $500 million and he's done nothing. He had 2 years where he tracked the S&P and he lost everything and the whole fund redeemed to zero. And this scumbag is worth $500 million. And everyone else goes, that guy's a genius. That guy is a genius. So when you hear these assholes being carted out, oh, former Goldman Sachs, former. Oh, and then you look in the history, Novogratz, Raoul Pal, all these guys destroy their fund. They take money from their clients that aren't theirs. They build up a fund. They destroy their fund. They go, they wait, they hide, they go open up something else. Wash, rinse, and repeat. That is the scam. It's not a scam. That's hedge fund management. Go watch Billions, right? Like go watch the show. It's not that far off. So, man, don't believe these guys. Because someone had a fund and blew up their fund or what? Oh, they'll have all these excuses. Oh, I decided to shutter it. Bitch, you shuttered it when everybody redeemed all their shit. So don't think these guys are smart. Don't think they're well-intended, and don't think they have a fucking clue what's going on, because they don't. I know a lot. Yes, scumbags. They are scumbags. Now listen, this isn't to mean everybody that runs a fund is bad. That's clearly not the case. There's some really good, Jeffrey Gunlock is amazing. There are some good fund managers out there, people that are worth, paying attention to and like following and like trying to learn from. But that is the exception, not the norm. You know who else was a fund manager until he blew up his own fund because of drug addiction and, well, I think it's alcohol. I read his book. Jim Cramer. Do you trust that guy? Seriously. He was a big fun guy. You think he would rather be doing these stupid daily shows versus making 50 times the money that he was making? Think about it. Come on, man. Wise up. These guys really frustrate me. He's like, oh, that guy works for a hedge fund. Who gives a shit? Some of the dumbest people I've ever met work for hedge funds. They're in banking. These dudes can't talk their way out of a paper bag. They are fucking weak. They are emotionally weak, and they're also just weak. They're just like old weak humans. You just look like you could just break them. Just like break their arms and shit. Just old chicken bone ass. Just old dried up, withered fucking humans. Just, ugh. Like Catherine said, scumbags. Dropped a lot of F-bombs today, but I feel like they were appropriate. Anyway, I'm being more attentive to my F-bomb use, and I'm trying just to drop them when it makes the most sense, as a double exclamation. You got to go up at the end of it. Anyway, keep all that in mind. So let's spend about 10 minutes talking about game theory and cognitive bias because we need to, and it's good for us. And that makes our brains work better. So let's do that now. Let me make sure I got all my stuff. Do we got any cool pictures we could throw up there? Ooh, price and value. Do we have a game theory? Ooh, this is a good one. I think this is a good one for game theory. Let's do it. Let's do it to it.
Hello. You're late.
You're bad at math, but I'm giving you an A+ in confidence.
Just doing what I gotta do.
Extra credit.
Oh, yeah. Okay. This one is not quite a review, but it is a little bit because most of you here we've been doing this. We're getting good at our game theory and cognitive bias kind of math. So put our education hat on, forget about all the scumbags, forget about all the debauchery, skullduggery, everything. Forget, doesn't matter. None of it matters right now. What matters is let's think about thinking. I want you to write that. How many people do we have here? Got 151 people. Text, write, chat. In the chat, we will think about thinking. Even that statement means it. A lot of people don't, think about thinking. Wait, no. We are thinking, this is thinking really pragmatically, really critically about the way in which we think. Thinking about thinking. This is pretty crucial. We will think about thinking. Yeah, even time to think about thinking. Well played. Bam. So let's think about thinking. All right. We're going to explore two what I think are the fascinating fields that have most influenced my investing, my mathing out of markets, and being able to live about 18 months in the future, which investing wise, it gives you like a crystal ball kind of. So we're going to talk game theory and we're going to talk in relationship to cognitive bias. You're going to hear some terms that are very similar, very familiar. And then you're going to hear a couple of terms, perhaps some different ways of looking at things that you may not have heard. Either way, game theory is our mathematical framework for modeling situations in which individuals make decisions that are interdependent, where inter meaning connected, SIPG, right? Where the outcome for each participant depends on the choices of all the other participants. So it assumes that players are rational and will strive to maximize their own payoffs. Then on the other side of it, working against this is cognitive bias. And these are those systematic patterns of deviation from norm or rationality in judgment. And the biases illustrate how our thinking can diverge from the ideal of rationality, which is assumed in game theory, right? And so they work against each other. But if you're thinking game theoretically and you're aware of your cognitive biases, you have a huge kind of cognitive leg up on everyone else. So the purpose of kind of today was to delve into the basics of game theory and cognitive bias and understand how they counteract each other and how the biases can actually dangerously turn or counteract the quality predictions and the quality assumptions that game theory gives you, because you're influenced by your own human decision making, right? Thinking about thinking. So if you have a whole system built on emotion and poor choice and counteractiveness and deviation from rationality, that's obviously going to work against your game theory, right? So first, fundamentals of game theory. Game theory is the study of these strategic interactions, strategic interdependencies among rational decision makers. Rational decision makers. It has applications, economics, biology, political science, psychology, anywhere you look, right? Evolutionary biology. So you have players, you have strategies, you have payoffs. Okay, everybody right. Players, strategies, and payoffs. This is the crux of game theory. Players. These are the decision makers in the game, the me's and you's. Strategies. These are the plans of action available to the me's and you's, the players. and the payoffs. These are the outcomes resulting from the combination of the strategies chosen by the players, the me's and you's, right? Players, strategies, playoffs. P, S, P. Players, strategies, payoffs. Remember Charlie Munger, beloved by some. I thought he was awesome. You show me the incentives, I'll show you the outcomes. He was a game theorist, man. Ideally, there's this fundamental concept in game theory, which is called Nash equilibrium. You'll hear, we talk about it from time to time. It was named after John Nash. And the Nash equilibrium occurs when players choose strategies where no player can benefit by unilaterally changing their strategy, given the other player's strategies remain the same. Basically, everybody's done the best they can do. No one can do any better by changing their decision. And that Nash equilibrium is the ultimate win-win-win-win-win, right? Everybody gets the best possible marginal benefit. Or it wouldn't even be marginal at that point. It would just be the best overall outcome, the best payoff given the other player's strategies. And so that's like the prisoner's dilemma that we talk about, where two people get arrested and are interrogated in separate rooms. They have two options. They can cooperate with each other by staying silent, or they can defect by betraying each other and talking. If they cooperate, meaning stay silent, they walk because there's no case. If one defects and the other cooperates, meaning one of them says, screw you, I'm talking. And remember, cooperation doesn't mean cooperating with the cops. Cooperating means with each other, among the players. So if one guy rats, he gets a 1-year sentence, and the person that didn't rat gets 10 years. So obviously the best payoff is they both rat on each other, because then they each only get 1 year. And you don't know for sure what the other person, I know it's bad, I'm advocating ratting. That's not what I'm saying. But mathematically, you must. It yields a better payoff regardless of what the other person does. 0 versus 1 versus 10. I'll take the 1 if it guarantees I'm not going to get the 10. So anybody who keeps their mouth shut leads to a worse outcome. Okay. Let's talk cognitive bias now. So that's our kind of our refresher on game theory, which we're going to do a lot more of. Anyway, now let's talk cognitive bias. Cognitive biases, again, are these systematic errors in thinking that affect the decisions and the judgments that people make. They are deviations from rationality, little like divergences. You know, this road is closed, go over here. I don't want to go over here. Well, you must, because cognitive bias. These deviations from rationality are due to the way our brains process information and the way we emotionalize decision-making. So there is the thing, we haven't really talked a lot about this, but it's part of cognitive bias when you dig in. There's system 1 and system 2 thinking. This is kind of a new concept for some of you because we haven't dug into this part of cognitive bias, but essentially there's a psychologist, Daniel Kahneman. I think that's how you pronounce his name, Kahneman. And he has system 1 thinkers and system 2 thinkers. System 1 thinkers are fast, automatic, very intuitive thinkers. Well, they don't even think of it as a kind of person. Think of it as that your brain has the capacity for both of these. These are two different, even kind of kinds of thinking. These are the two paths. You might have two levers, and it's not all or nothing. Usually it's some degree of both, right? It's a spectrum. So the system 1 lever is that fast, automatic, intuitive thinking, right? Something jumps out of the water. Whoa, right? Then there is the system 2 thinking, which is slow, deliberate, analytical thinking. It's much different. System 1, that fast, automatic, that's reactionary thinking. System 2 is slow, deliberation, contemplative, analytical thought. Biases often arise from that system 1 thinking, right? Sure, that's efficient when you're running through the jungle and being chased by an animal and you have to go left or right. But if you come up to a cliff, now system 2 thinking might also be somewhat important, because now it's not just left or right. It's, wait. I gotta think about some things. So system 1 thinking, it's efficient, but it is prone to errors, right? So the longer you can deliberate, the longer you can think analytically, the better your outcomes are going to be. That's when you get back to that game theory thinking. Game theory starts as system 2 thinking, but the better you get at it, it can be honed like a skill and become part of your system 1 thinking. Does that make sense? Where you make pretty fast, really smart decisions based on your practice of game theoretical thinking. Biases are often system 1 processes. Again, efficient, but prone to errors. So you have some of the biases. Obviously, we have the 25 cognitive biases, but anchoring bias, confirmation bias, overconfidence bias, loss aversion, recency bias, like price-wise. Anchoring bias, relying too heavily on the first piece of information you encountered. That's primacy versus recency. Confirmation bias, favoring information that confirms the beliefs that you already had, which you already had them. So you tend to weight that information over other information that might be against or conflict with your previous views. Overconfidence bias, overestimating one's own abilities or the accuracy of one's predictions. Injury through intelligence, right? Loss aversion, the tendency to prefer avoiding losses over acquiring equivalent gains. Does that make sense? Where like you win and that's like a +1 emotionally. You lose, it's like a -5 emotionally, but it's the same $5. And of course that has roots to like evolution and survival, but these things all work against us now in the way we live our lives. So how do cognitive biases counteract game theory? So let's look at the ultimatum game and fairness bias. So in the ultimatum game, a player proposes how to divide a sum of money and get the second player, right, can accept or reject the offer. If the offer is rejected, both of them get nothing. Like, wait. Yes. So in the ultimatum game, it's this or nothing. Player 1 has to be really thinking about, wait. If I do this wrong, we get 0. I got to make this a win-win. This is going to be as fair as possible. Okay. In game theory, the game theory prediction would be the person proposing should offer the smallest amount. This is just pure game theory. And the responder should accept it because something's better than nothing, right? If I have $100 and I'm going to divide it 99 for me and 1 for you, you should accept it because it's a free dollar that you didn't have. But your cognitive bias will get in the way, right? You'll say, what? Why do you get 99? The why doesn't matter. You don't have 1. You just got 1. You win. No, that's not how people do it. Responders in testing, they often reject low offers due to the perception of unfairness, and they will sacrifice their own gain to punish the proposer. You know what? Screw both of us. Seems kind of woke, doesn't it? Weird. This is woven through wokeness, but that's a whole other thing, and I'm not going to get into that. Let's talk prospect theory and risk aversion. In prospect theory, which is also developed by Kahneman and another researcher, Tversky, it describes how people make decisions that involve risk. This is where we go to like loss aversion, right? Where losses tend to loom larger than gains, and people are more sensitive to potential losses than they are to equivalent gains. Like when I play soccer, I hate losing more than I enjoy winning. When you win, you're like, wow, we won. When you lose, you're like, this is the worst. I'm never playing soccer again, burning my cleats, right? That's loss aversion. The impact on game theory is that players will avoid rational strategies that involved some perceived risk of loss, even when the expected payoff is positive, right? So they're stepping on their potential winnings to stave off some very minimal potential losses. And it's not just financial losses. This can be, this has all sorts of kind of tendrils that go into voting and election theory and like on eBay, auction theory and things like this. Really, really interesting stuff. Anyway, let's talk about overconfidence in auctions, the winner's curse. So in common value auctions, an item's value, I was just on eBay trying to get these cool shoes. But anyway, I didn't get them because I couldn't make it work. But anyway, in common value auctions, the item's value is the same for all people. I mean, we all agree that the value is the same, but bidders have different estimates. Does that make sense? So the game theory prediction is that bidders should adjust their bids to account for uncertainty and the likelihood of overestimating the value. Basically, you should bid only what you think the value is, because anything more reduces the value. You've paid too much for the thing outside of what you value that thing at. The actual behavior is that bidders fall prey to the winner's curse. And then they overpay and overbid due to overconfidence in their own estimates. Does that make sense? So they get caught up in the game and they quit using game theory. So that's no bueno. Anchoring, you'll see anchoring, like the anchoring bias in negotiations, where like in a negotiation, the initial offer serves as like an anchor, and that can influence the outcome, right? Does that make sense? Well, in game theory, a rational negotiator would adjust the strategy based solely on the underlying value. You see this value term coming up. Value. What is the actual value? Bid on the value. Negotiate on the value. Not on your desire to win a vote, win an auction, win some weird competition. Simply negotiate or bid or vote on the value. Reduce it. And negotiators, like in real life, are influenced by the anchor, even when they know it should be irrelevant. We started here. Well, that's not the value. This car's worth $8. Well, my first price is 40. Okay, but it's 8. Like 8 is what it's worth. Do you agree? Yes, but I put 40. Okay, man, but 8 is what it's worth, right? The actual behavior is deviated by cognitive bias, which we don't want that. So anyway, it's important to start thinking about these are not two separate frameworks. They are connected. So while game theory gives you your kind of really positive, powerful framework for understanding strategic decision-making, SIPG, right? It relies on the assumption of rationality. Cognitive biases clearly demonstrate that human behavior deviates from rationality due to these errors in our thinking processes. So if you can start to understand how these things are related and correlated, then it helps you predict human behavior in strategic situations, in social scenarios. It allows for the design of better models that account for these weird deviations that can occur. It aids individuals and groups in making more informed decisions by recognizing and mitigating the influence of their own biases and by thinking in terms of value. So the last thing for the day is, those of you that are still left, you're going to say, I want you to write in the chat, I will think in terms of value. I will think in terms of value. None of the rest of it matters. I will think in terms of value. All right, let's see it. And on that note, stay in school. Don't do drugs. Don't do anything about porn, solve, drunk, starting on meth. Grandmother or Brandon wouldn't do. We'll see you back tomorrow. For those of you that are just joining us, yay. For those of you from other communities, welcome. For those of you that want to be digital investors, be digital investors. Bro, don't be on the sidelines, man. Don't be on the sidelines, bro. Everybody else getting paid, just sitting on the sidelines. And for those of you that are accredited, you might consider private client. It is a step up from digital investor and might be interesting to some of you. Let me see if I can find that. Ooh, look at this chart. Look at this fancy ass chart. Wow. Get rid of this banner. How do I find it? Ooh, let's go there. Let's go there. And let's go here.
If you're an accredited investor and you want in on angel, seed round or early round equity and token opportunities in the artificial intelligence and cryptocurrency space, schedule an interview at nickblacknext.com. In life, you can either be really good, really lucky, or just be first. Being first is so much easier. Schedule a digital private client interview today at nickblacknext.com.